The good news is that the data shows that Bitcoin's about to have a really big move. That's the good news. But the bad news is that I'm not sure that the move is going to be an up move. It could be an up move. I'm going to show you the data for an up move. But in all probability, if you look at the balance of probabilities and you look at the data, the move should be a down move, and it should be a big move as well. I'm going to show you all the data in the show today. I'm going to show you exactly why the move's about to happen, and I'll show you what the balance of probability says about which way the move's going to go. As I said, there is a chance that the move goes up, but the probabilities favor a down move, and I'm going to show you exactly to what levels that down move may be. I think in the interim, we should probably look at what happened on the market. So if you look at what happened on the markets, the NASDAQ is now basically flat after a very bad day yesterday. So if you look at what happened to the NASDAQ yesterday, we were down just under around 3%. Today it looks like the NASDAQ's going to open basically flat. South Korea actually slightly recovered. The Kospi's been doing that a lot. Goes down 10%, up 3%, goes down 10%, up 3%. At the same time, Bitcoin isn't recovering. And as you can see, Bitcoin is now going back towards the lows, or almost back to sweeping those lows. Now it's 61,705. And as Ben Cowan here says, he says Bitcoin is in a very tricky situation. And the reason why it's a very tricky situation is if you look at the charts that you see in front of you on the screen, you can see the white line. That's the 200-week moving average. And that's a key level when it comes to bear markets. And the reason why it's a key level when it comes to bear markets is if you look at this chart over here and you look at the white line, you can say that in this bear market, we rebounded. We just spiked below the white line and we wicked below it and we carried on going back up. In this bear market, it was basically the end. This was COVID, so it was a little bit of an anomaly. In the last bear market in 2021, 2022, in that bear market, we went slightly under it and we stayed under it for quite a while. I'll show that to you on a better chart over here. So if you look here at this chart over here, we went under it here. When we broke the 200-week moving average, we still went down about 30%, and we stayed under it until eventually we finally broke above it only 504 days later, or about a year and a half later. So that white line, the 200-week moving average, is quite a key line. Now, right now, if you look at Bitcoin is between the 200-week moving average and the bull and bear market support bands. Now, why that is such a key level is because if we go below the 200-week moving average, we get a repeat of 2021, and that means that Bitcoin goes down about 30%. Now, I just want to show you what that means when you actually look at the chart. So that's the chart, and you say Bitcoin down about 30% from here. Let's go down all the way 30% from here. So that's okay, so that takes us to about 45,000. I want you to keep that number in your head, that 45,000 number in your head. That's what happens if we repeat the 2021 scenario. On the other hand, and that would be the good news, is if we break above the bull and bear market support band. So this is the bull market support band. Below it, you're in a bear market. Above it, you're in a bull market. If we break above that, we could actually invalidate the 4-year cycle, and we could actually be out of the bull market, out of the bear market. It's not impossible. I mean, if you look, as I said before, if you look at history, you can see that history says that, you know, in two of the previous bear markets, what happened was we got here. This would be the 2019 bull market and the 2019 bear market, and this one would be the one that we'd been most similar to, and we only spiked below it because of COVID. But so right now we are looking for a move, and the question is whether we're going to go above the bull market support band or we're going to go below the 200-week moving average. And then it comes down to probabilities, and that's what I want to talk about today. I want to talk about the actual probabilities. A lot of people are basically fed up with this industry, and to be honest, it has been a very, very, very tough market in being in this industry. Bitcoin bear markets are generally very tough. Like, we are known for the asset class holders that have the biggest risk tolerance. We have the biggest swings. Now, I was talking to a friend of mine yesterday, and he says to me, "How's the market going?" And I said, "No, it's down." And he says, "You know, like when you're in crypto, you've got to have like the biggest, for you, like volatility has got to become nothing. You've got to like almost like be in the face of volatility and be completely calm." We are known as the asset holders that can sit through any kind of volatility because we are the crypto holders. But we're also known as the asset holders that get the best returns when the returns actually come. Unfortunately, in this bull market, we never actually got the returns. Like we went, I mean, if you look at the previous bull market, we went from, you know, like the previous all-time high of 19,000, we went to 68,000, which was like you can say 3 times or almost 4 times above the all-time high before that. In this one, we hardly even doubled the all-time high. In fact, we didn't double the all-time high, so it wouldn't even get a 2x return in this bull market. And so this bull market was extremely disappointing. And then to make it worse, like we're in the traditional Bitcoin bear market. The traditional Bitcoin bear markets are very, very, very tough. Like, you know, if you're a Bitcoin holder, bear markets are made to destroy you. They're made to destroy you by time and by Bitcoin going up, and then flashing you and going down again, going up, flashing you, going down again. That's how Bitcoin tends to break people in the bear market. And it does that very successfully. The worst part of this bear market is the fact that we have AI running. And I want to play you this clip. It's from 𝗙𝗚𝗡𝗔𝗧𝗨𝗥𝗘𝗏. I'm not sure where this video was aired. I was looking for it on his channel. But I want you to play. This is with Jose from
I think
𝗙𝗃𝗏.
there's still interesting enough opportunities in crypto where if you're, depending on portfolio size, it still is, for better or for worse, one of the better industries to really multiply your wealth, especially from a lower base. Like, there's still coins that do really well. There's still interesting projects. If you were up to date on the AI bottleneck trade this year, the memory stocks are up like 5 to 6x. You know, SanDisk is up way more than that. I think nearly 10x. And that wasn't like that hard a trade to catch. And I think there's going to be more opportunities like that in equities markets. You just have, like, I think in crypto in general, the gravity is down, right? Because you have insider selling, tokens unlocking, and stuff like that. Whereas in the stock market, the gravity pulls you up, right? You have index funds buying.
It's such an interesting
growth
take.
In the underlying.
He basically says, look, in crypto, the gravity is down. We're paying for all these token unlocks and whatever else. And then at the same time, with AI, the gravity is up because as the AI trade runs, the index funds have to keep buying more of the AI stocks. And that gravity basically takes the AI trade up. So you've got AI trade going gravity up and you've got crypto going gravity down, which is
underlying companies. You have like massive infrastructure spend by the largest and most profitable companies in the world, driving the whole cycle of power and all of that. So I just think it's an easier game. I guess if you're willing to put in the time to really try and find the gems, I think there is opportunity in crypto, but I think the stock market is more relatively attractive than it's ever been.
So, like, when you talk about the stock market being like the place that's very attractive, then you kind of ask yourself, okay, well, if Bitcoin was the speculative asset, or always has been the speculative asset in the portfolio, like the pitch around Bitcoin was, like, when Bitcoin runs, it's going to run faster than the stock market, it's going to run faster than any kind of stock market return. And then in reality, you get the AI trade stealing the Bitcoin trade. And then Bitcoin not actually being the speculative asset in the portfolio, Bitcoin starts to get an identity crisis. And that's the biggest problem with what's happening with Bitcoin right now. When you pitch Bitcoin to your friends today and you tell them buy Bitcoin, why? You're going to say, well, you know, it's decentralized money that governments can't control. Okay, who cares? Like, I don't live in Venezuela. I don't live in Zimbabwe. Who the hell cares? I mean, we live in South Africa, so we care a little bit. But who the hell actually cares, right? And that's the problem. And I'm not the only one picking up this problem. If you look at investors on Wall Street, they're starting to pick up the same thing now. It's the same vibes.
I don't know what to think about Bitcoin anymore. The one thing I was wondering with Bitcoin is there was a time when there were very few IPOs. Part of it is I think the public markets are a little bit broken with so many index funds and stuff. Everybody thinks the same, thus nobody really wants, new IPOs. I wonder if Bitcoin was a little bit sort of the off-ramp for everybody that wants to have something a little bit more speculative.
Yeah.
Now that we have these big IPOs on one side, and then we have stablecoin on the other, and stablecoin involves the word stable. So if you really want to just put your money offshore, put your money in a new system.
So stablecoin is stable. If you want internet money, digital internet money, stablecoin, good enough. And if you want speculation, then you go to AI, and then you ask yourself, okay, well then what is Bitcoin? That's the problem. And then at the same time, you also kind of look at risks to the crypto ecosystem. And the way that I see it, right now, there are 4 risks to the crypto ecosystem, which make this industry completely unattractive. The first risk around why this industry is kind of unattractive is you've got this Clarity Act. They've been promising us that we're going to get this Clarity Act, and it's going to give everybody clarity about what a crypto token is. The truth is, if this doesn't pass by the 17th of July, then it's not passing, because the Democrats are going to win the House, or they're going to win the Senate, or they're going to win something, and then the Clarity Act ain't getting through. So one of the big risks here is the fact that we may actually not get a Clarity Act. And I actually want to talk, let's just go to Polymarket quickly and actually just look at the Clarity Act passing. I'm going to show you something around prediction markets in a second. Let's just look at the Clarity Act. So Clarity Act signed into law. Now there's a 42% chance that this Clarity Act is going to get signed into law. So here you got this industry where we were promised clarity, and now even with the best president in the world who's completely invested in crypto, we ain't getting clarity, or we may not get clarity. That is one big risk to the crypto ecosystem. The second big risk to the crypto ecosystem is quantum computing. So you've got quantum computing, which will come out at some point, and right now, the biggest protocol in crypto doesn't have a quantum resistant plan. Like, let's just call a spade a spade. Yes, Michael Saylor said he's going to start this council around quantum computing. Since then, I haven't heard one thing about how this quantum computing thing is going to happen. And the quantum computing thing is real. Like, I know we don't want to believe that the quantum computing thing is real, but investment managers around the world look at this and say, hold on a second, with Bitcoin, yes, you may say when quantum computers come out, the banks can get hacked. Yes, but banks can reverse transactions. Banks can freeze withdrawals. Banks theoretically, hypothetically have a KYC on all their customers, right? Crypto doesn't. When they crack the Bitcoin private key, public key algorithm, they'll just steal your money and there's no way to actually get it back. So yes, quantum computing is a risk, and I'd really like to see Bitcoin actually getting some kind of quantum resistance plan. So you got quantum computing as a big threat. You got no Clarity Act. You've got Saylor, and right now the market perceives Saylor. Unfortunately, it perceives Saylor not. I mean, this is the reality, but also unfortunately, the MicroStrategy narrative out there is that MicroStrategy may go into liquidation or be forced to liquidate Bitcoin. The truth is that even if he didn't do anything, if he just stopped doing anything right now, he has $1.4 billion in cash reserves, and his annual dividend is 1.7. So he could just sit on his hands for the next 2 years, literally, for the next year, and just let the storm pass. And that's theoretically what he should be doing. But the market doesn't see it like that. The market sees the headlines, and the headlines say that you got this maniac who's got $1.7 billion of obligations. He's got 847,000 Bitcoin, which is $50 billion worth of Bitcoin. And this guy may be forced to start liquidating his Bitcoin, right? And look, I mean, the truth is that this couldn't be further from the truth, and Saylor's not going to liquidate Bitcoin to pay dividends, at least not for the next year and a half, because he has enough. And within a year and a half, we hope that the market would have turned. If the market doesn't turn in a year to a year and a half, we should really evaluate the thesis of why we actually hold this asset, because that way the 4-year cycle would have been completely invalidated. So that is a problem. And by the way, on that, I don't know if you guys have seen this. It is the most hilarious thing that I've seen on the internet. I'm probably going to get a copyright strike for playing it for you guys. But to me, this is, I don't know if you, Hardest, have you seen this? No. Okay, well, watch this, sir. Watch it. I'm going to make it big here, and then you got to see it. This is like the funniest thing you've ever heard in your life. Are you ready? It's funny. I'm telling you, it's really funny. I don't know if you're ready for how funny this is.
Eventually, the whole company collapses. I mean, regardless of what you think about Bitcoin, strategy is a disaster.
Put your money where your mouth is. Yo, Peter, you've been talking for years, man. Fraud, Ponzi, bankrupt, death spiral. Cool, then short it. You saw Bitcoin at $1, still called it a scam. Now your ego way more than the gold in your hand. Every cycle, same song, same fear, same doubt. But the chart kept running while you kept sitting out. You call Stratty broken, say the model won't last, say the whole thing unwind, say the crash comes fast. That's your C under par, now you're dancing online. But I bought $1 million, Peter, where's your spine? Put your money where your mouth is. Stop barking from the crowd. If you think it goes to zero, short it now, say it loud. Put your money where your mouth is. No tweet, no gold bug tears. I wrote $1 million ticket. You've been wrong for 15 years. You say Ponzi, fraud, bankruptcy soon. Same old funeral song under a Bitcoin moon. You say sailors finish, dividends won't pay. But you've been calling top since Coinbase had no UI. You want a headline, I want a position. You sell fear, I make a decision. You talk risk like you're reading a script, but never touch the trade. When the price gets clicked, that's jersey at 90. I stepped in clean, not with a meme, not with a scream. Form 4 filed, real cash on chain. No, real cash in market, skin in the game. Put your money where your mouth is. Stop barking from the crowd. If you think it goes to zero, short it now, say it loud. Put your money where your mouth is. No tweets, no gold bug tears. I wrote $1 million ticket. You've been wrong for 15 years. Peter, you don't hate strategy, Hein. You hate the fact you missed Bitcoin again.
Put your money where your mouth is. So put your money where your mouth is. I mean, I love that. Anyway, so that's the third risk to crypto. And I'm going to quickly talk about the fourth risk to crypto, because I think it is a risk that is worth talking about. That risk is the fact that crypto is a bunch of open source protocols. Open source protocols means that we show our code to everyone. And the thing is that all this code was built with humans, right? Now, the thing is that it was built at a time where there was no AI. And so what you're seeing every day is you're seeing a lot of vulnerabilities happening in crypto protocols. I don't know if you guys saw this. I was very shocked when I saw it, because I never thought that this could ever happen, right? I never, ever thought that Cardano could be hacked, or a wallet in Cardano could be hacked for $20 million. The reason why I never thought that this wallet could be hacked in Cardano for $20 million is I never thought anybody would put $20 million in the Cardano network. But turns out that there was $20 million in the Cardano network, and it was hacked. Now, you are reading, how did you know that there was $20 million on the Cardano network? Impossible. Anyway, back to the story, back to the thesis. The thesis is the following, right? Most of these protocols were built at a time when there was no AI, and they were built by humans. And now the problem is that the protocols are lying in the sun with their code exposed to everyone. Even you, with a $19.99 Claude subscription, can basically work with Claude to work out a way to hack any protocol, right? That's how simple it is. And so you've got a whole lot of open source protocols which are lying there with their code exposed for anyone to see the code and to hack. And by the way, if you hack it, you get your money immediately, unlike any other industry in the world. And so that is, for me, a very, very big and existential threat for crypto. And so we're going to go through, in my mind, we're going to go through a renaissance. We're going to go through a very bad period for a little bit of time where all these hacks are going to happen, and crypto is going to lose favor, because the market's going to say this crypto industry is so scary, because any protocol can be attacked at any time by a 1999 AI model, and the AI models are getting better and better. And when people do that, they basically get a honeypot, and that honeypot basically gives them access to immediate money, which is like, it's unheard of. So that for me is the biggest risk to crypto right now. But the protocols that survive will be battle tested and completely AI tested, and those will survive the test of time. And then some protocols will just get hacked to death, and that's exactly what's happening. In fact, one of the things that, to me, I hate to dunk on Cardano holders, but and because I do think that Cardano actually at one point showed a lot of promise. But I want to just show you something here, which is, I think, a sign of the times. And the sign of the time says, look, if you're a dead chain, get out of the top 20, get out of the top 20 chains. And for the first time, I think, since the launch of crypto, Cardano is now at number 22, and it's basically going down. And there's a lot of chains that are going to follow the same thing. There's going to be chains that are going to die, and there's going to be new chains that go up, and the new chains are going to be battle tested, etc., etc. So let's go back to the main story here. So those are the four risks. Now let's go back to the main story. So the main story, as I came to and I said to you, Bitcoin is going to have a big move. And right now, Bitcoin is sandwiched between the bull and bear market support bands and the 200-week moving average, which is a key level. I explained to you that it's a key level because, as you can see here, the 200-week moving average is the bottom or near the bottom. Like you can see. So now the question is, do we go up or do we go down? I'm going to start off with the Hopium trade, and I'm going to show you the Hopium trade, and I'm going to show you the more unfortunate, what I'm going to call the reality trade, right? While I'm giving you the reality trade, Bitcoin is basically playing out exactly like I said it was going to go, which is actually down. The Hopium trade is that because we're at the 200-week moving average, in the past, in post-election markets, in 1 year, in 2 years, we have bounced, and in 1 year, we haven't bounced, and maybe we'll bounce off the 200-week moving average support band. That's the Hopium. So if you're here for the Hopium, don't forget to like and subscribe, and you can jump off the show now, and we can get on with the non-Hopium, because the rest of the show is not Hopium. So if you're not ready, if you haven't taken your heart rate pills, if you haven't taken your beta blockers or your Xanax, then possibly I see 5 people have dropped off. I think the rest can also drop off, because from now on it's going to get a little bit more brutal. as I talk about the reality. So the Hopium, as I mentioned, is that we bounce off the 200-week moving average, and that's the end of the bear market. Thanks for playing in this bear market. We'll see you in the next bear market. Don't think it's going to happen. Let's talk about the more realistic case. The more realistic case starts off with the halving cycle. The halving cycle says that the end of the bear market usually happens about 850 days after the halving. We are now at 793 days after the halving. It means we have about 50 days. 50 days takes us to somewhere around end of September, October, and that's more or less when we should turn, or at least if we follow the 4-week cycle. So on the most basic of metrics, you can say that just by mere fact of the 4-year cycle, there's still some more pain ahead or some more down ahead. And if you look specifically at previous markets and you go back to the Octobers, I'll try and get us, let's just quickly get here. And okay, I can't see it. My little bar here is there. Let's try and, okay, so basically you want to get to a point where, oh man, can you believe it? How do I get rid of this stupid finder? Go away. When you talk to it, doesn't go away. Go away, finder. Finder, go away. Doesn't go away. Okay, let's see if we can maximize window. Let's see if we can do like, no, doesn't work. Okay, bottom line is we don't usually bottom until effectively October. Actually, on your one, you can't actually see the bar, which is amazing. Okay, so if you look here, you can see that we bottomed somewhere around December, October, November, December. That's normally when these bear markets actually land up bottoming, okay? So from a plain time point of view, we haven't yet got to the time that we should take. But then you go on to on-chain metrics. Like the one on-chain metric that we normally go under in a bear market is the realized price. Okay, now for us to go under the realized price now, that number is at $53,000. So at least if we were going to hit the other on-chain metrics, $53,000 would be kind of like the next level, and that is the realized price, which is effectively the average price that Bitcoin people have actually have basically paid for their Bitcoin. The next metric that you need to look at is the market value over realized value, which is the MVRV score. And you can see that one also has a little bit of downside to come down. And what does this actually measure? The market value of the Bitcoin versus the realized price. So it actually has a little bit more downside to go before we can actually say that that's over. Then you've got a third measure, which is the terminal price. Now the terminal price is, you can see that with the blue line here is the Bitcoin price. Now what you can see is that in every bear market, we've actually touched the terminal price, right? The terminal price right now is at, I don't even want to say it. It is at, hold on, what is the level over here? Is it 31,900? Can it be that low? I really hope it isn't, but it looks like it is about 31,900. I hope to God we don't actually get there, right? I hope to God we don't actually get there. Then you've got this measure over here, which is quite a nice measure. I actually found it here. It's the short-term holders divided by the long-term holders market signal. So when the short-term holders and the long-term holders actually converge on chain, that's this signal over here, and sorry, that is that signal over there, and that also says that we're not at a point where we are ready to bottom yet. Same thing here with the long-term holders realized P&L. You can see that when we always touch that long-term holders realized P&L price. Right now, that realized P&L price is, what is that price? 32,600? No, 48,000. It's at 48,000. So all these signs are pointing at another move down. Look at the RSI. The RSI is also telling us that, we're not at the bottom of the RSI, at the bottom of the RSIs yet. We still have a little bit of a way to go when it comes to the RSIs. Even if you just look at the peak top to peak bottom, now I'm not paying too much attention to this metric because we didn't really have a very vibrant bull market. So if you don't have a very vibrant bull market, you shouldn't get a very deep bear market. But in other bull markets, like we went down 86%. Here we went down 82%. Here we went down 76%. We've only gone down 61%. Now you could argue and say, well, we only went up 1x, so maybe the bear market shouldn't be as bad, but it just doesn't feel like we are there yet. What else is there? So let's see if there are any other metrics that we have. The Gaussian channel basically says that we have to turn green before we actually go up, and right now we're still in the red. So look, and then the last one, which I actually like, is the percentage of supply in profit and in loss. And remember that these tend to cross over before the end of the bear market, and they need to spend some time in the crossover, and we've just crossed over and we haven't spent any time in the crossover. So when I put all those metrics together, I say, hold on a second, there's probably is a big move happening on Bitcoin, but unfortunately for me, the balance of probability says that the next move is down. It's not an up move. It's a down move, and we are starting to move down. Now, will the move happen today or tomorrow? I don't know. I don't think so. Is it going to be a big violent move on the way down? Possibly. Where does it end? I don't know. I put my money somewhere between $40 and $55,000. Probably more $40 to $50,000. I know it's not the news that you want to hear, but you don't pay me. You don't pay me to tell you what you want to hear. You don't pay me at all. Actually, you don't pay at all. No one pays. Yeah, that's it. Let me know in the chat if you believe or if you think that if you follow the thesis. A couple of other announcements. So remember to follow this at 247wire account, because it's the fastest news account on the market. And we're building more and more news into it every single day. It's a free account that gives you the fastest news in the market. I keep saying to you, it's like a free follow at 247wire. What is happening on the World Cup today, friends? What is happening on the World Cup today? Let's have a look. So we have games. We have Switzerland versus Canada. Yesterday's game was amazing. I don't know if you guys watched the Portugal game. So Ronaldo actually came back. Horace, did you watch yesterday?
Ronaldo was rocking it.
He was rocking it yesterday, and there was one free kick which was absolutely amazing. So I want to talk a little bit about prediction markets. Don't know if you guys saw coiling. I don't know if you guys saw him exposing the big poly market scandal. He wasn't the one who exposed it. It was the Wall Street Journal, it was the Washington Post who actually exposed it. But basically they said that poly market paid influencers to pretend that they made money on the site. And the way that they did it was they registered a site called POIA markets, poly, POIY markets, poly markets with an I, it's poly markets with an I, and to register fake bets. And then to make videos about these fake bets. Now, even if you had taken the bets that the influencer said where they made all this money, and I actually want to show you, maybe I can show you.
Today I talked to two journalists who ran two.
Hold on, I've got to try and find it.
Is all around.
Yeah, look at this.
And if you look at the URL, it very clearly says Polymarket, or at least that's what I think that says. I'm zooming in. It looks like Polymarket, but the Wall Street Journal says it's a different website entirely.
We have spoken to people who have told us that Polymarket created this website. That this website, Polymarket, was made by Polymarket.
Wait, you said I didn't just have an aneurysm. I just heard Polymarket. What?
This
what
is
are you
at least what
about?
we have called it. This is the so. Polymarket has created this program where they have told college-age creators to film content promoting the website, and as part of that, they should film themselves making trades. Now, to film these trades, Polymarket, our reporting shows, created a fake website called Polymarket, or at least that's what we are calling it, but it's POIY Market. And when the I is capitalized, it looks exactly like the real thing in terms of the URL. But when you look at the actual website where the trades are being placed, there's a bunch of discrepancies that we found, which led us to realize that a lot of these bets that are being placed weren't actually on Polymarket's websites. They're on this fake website that Polymarket gave creators access to go and make what looked like real bets.
Guys, to state the obvious, I don't know who thought of this.
So I don't know. I must say I've got a severe distaste for that. I think that's like plain. I mean, Polymarket haven't come out, but to me it just sounds like plain unethical play. Anyway, I've been placing like trades on Rain rather. Now I'm not commenting about the Rain token. I don't hold the Rain token. I don't have anything to do with the token, but they do have amazing bets here. So like the one bet that I'm really following closely is the World Cup winner bet. France still number one. Spain still number two. Argentina still number three. This is a big one because France has got Kylian Mbappe. He's 27 years old now, and I wonder if he'll be the GOAT. If Argentina win, it means that Messi's won the World Cup twice, and I mean that puts him in like the bigger GOAT than Ronaldo. All of these trades are actually on Rain. Also, there's other like will Ronaldo cry? The Golden Boot. This is an interesting one. So who's going to win the Golden Boot? Is it going to be Kylian Mbappe, who is 27, or Messi, who I think is 40 or 41 years old? There's a lot of these. There's a lot of these like unbelievable trades that you can actually take, as well as the actual game itself. The URL is rain.trade. There's a link below if you guys wanna check it out. Okay, listen up now. I know it's been a slightly longer show, but just listen up here for a second. If you are in the farming points narrative in derivatives markets, in decentralized perpetuals, there is an exchange which is taking on Hyperliquid. There's variational, which we've been playing, but there's another exchange it's called TXFlow, and it's the exchange that is launched by one of the big exchanges. It's launched by Blowfin. You're not supposed to know that, but actually now you know about it, right? They were the ones who incubated this chain and this exchange. We're bringing it to you really, really, really early so that you can get the points. It has all the pairs. It has SpaceX. It has every pair that you can imagine. It's got like the most assets to actually trade. If you trade now, you are trading before anybody else, and you get the points multipliers and whatever else, which is like you guys are getting first access to it. And that's the people that get first access are the ones that end up making the most money on points. If you want to try it, there's a link below. You can try it. Let me actually try and find you the link, so it just makes it a lot easier for you guys. You can try it. You connect your wallet on the Arbitrum network. You connect your wallet, and here we go. So you can actually connect your wallet. Here we go. Connect your wallet. Use the code TXBanter. That'll give you 5% off your trading fees, and no trading fees. Your perps fees on us, and plus $100,000 in prizes every day, and you get the points. So go as quickly as you can, because this is like. You want to be in something that you can be in from the beginning. This is something that can be from the beginning, and it's backed by one of the big exchanges. And I think it could do really well. And all you do is you just play, and even your fees are free. So I don't know. Sounds amazing. All right, my friends. See you guys again tomorrow. Until then, trade well, my friends.